In this section, we will look at the cryptos. So this is chart number 16, Bitcoin, weekly time frame. Question 1. Is there a star on this chart? Where and why? Question 2. Which candle's support does this hammer confirm? Is the low of that candle really a support and why? So we are looking at this red candle. Number 3. You would go long on which one of these two candles and why? So you look at this one and this green. Number 4. This candle confirms prior resistance. Why can't you go short on that candle? So we are looking at this one. Number 5. This candle has long upper lower shadows. Does it still complete any pattern and why? So this red candle. Number 6. What does this candle confirm? So this red candle. Number 7. Using the Fibonacci levels to go long on this candle increases the reward to risk ratio or decreases it. Why? So if you use the Fibonacci levels on this candle, then will it increase or decrease the reward to risk ratio and why? So question 1. Is there a star on this chart? Where and why? See, the answer should be obvious, right? This is Bitcoin, so it's a cryptocurrency. So it's a 24-hour market, right? So for 24-hour markets, how can there be a star? Because a star is a candle which gaps away from the prior candle so that the body of that candle does not overlap with the body of the prior candle, and it usually occurs at the top or at the bottom. So in this case, there is no star on this chart because it's a 24-hour market. So the close of the prior candle will be the open of the next candle. Same applies to Forex market. Question 2. Which candle's support does this hammer confirm? So it's confirming the support created by this candle. Is the low of that candle really a support? The answer is no. We cannot consider the low of this candle to be support because it's not a special candle or it doesn't complete any pattern. If we look at these two candles, that's a bull harami, right? But the low of the bull harami does not become support. So the low of that candle is not really support other than the fact that since it's a weekly chart, the candle occurred 4 or 5 weeks prior to the hammer. So that is why this becomes important. But in general, I wouldn't consider the low of such candle as a support unless it is confirmed by some other future price action. So third, you would go long on which one of these two candles and why? See, since this, I don't consider that as a real support since it is not a pattern or it's not a pivot high. Pivot low means something like this. The price comes down and then it goes up. That becomes a support. So in this case, I don't see that happening. So the hammer, although is confirming this, I wouldn't give much importance to that hammer. So I would not buy on the hammer. Second, this is completing a bullish engulfing pattern. However, it fails to test the low of the hammer, right? So I would not buy on that candle either. So I would buy on none of these candles. Number 4, this candle confirms prior resistance. Why can't you go short on that candle? Okay, it confirms this resistance, that is fine, but look at the lower shadow. It's not a shooting star. Number 5, this candle has long upper and lower shadows. Does it still complete any pattern? Why? Of course, this candle completes a bearish engulfing pattern. And for the bearish engulfing pattern, the shadows do not matter. That is the reason why it is still completing that pattern. Number 6, what does this candle confirm? So this candle is giving us price confirmation for the bearish engulfing pattern. Number 7, using the Fibonacci levels to go long on this candle increases the reward to risk ratio or decreases it. See, some traders like me would not buy this hammer because I don't consider this as a support. But suppose you were to buy on that hammer, okay, and you put the Fibonacci levels on that candle. So this would be 100%, this would be 0%, this would be 100%. And somewhere here would be 50%. So if you put a buy limit order on the 50% level, your risk is this much and your reward is what? Till here? Correct? Earlier, your reward was this. If you bought on the hammer directly, that was your reward and that was your risk. So your reward to risk is actually increasing if you are using the Fibonacci levels. Chart number 17. This is Ethereum daily time frame. Question 1. Are we looking at a tweezer stop here? Is it significant and why? So these two candles. Question 2. Which two signals is this shooting star sending out and why? So you look at this red candle. Number 3. Would you go short on that evening star? Why? So this evening star. Number 4. Why did the price continue to decline after this box range? So you see a box range here. Number 5. Spot the 3 black crow pattern on this chart. Number 6. Spot the 3 white soldier pattern on this chart. And number 7. Why would you not be surprised to see this box range here? So you have a box range here. So question 1, are we looking at a tweezer stop here? Is it significant and why? So if you look at these two candles, both are having the same highs. So yes, this is a tweezer stop. The second question, is it significant? The answer is no, because as I explained earlier, for a tweezers, that's the only pattern where a time frame becomes important. For a daily time frame, we don't give much importance to the tweezers pattern unless both the candles complete some kind of a pattern like a dark cloud cover, or for a tweezers bottom, if it's a piercing pattern or something like that. If it's simultaneously completing a pattern while being a tweezers, only then we give importance on the daily chart. But if this were a weekly chart, of course I would give it some importance. Number 2, which two signals is this shooting star sending out and why? So the first signal is the sell signal, right? Because it's confirming this high. And if it is confirming some prior resistance, okay, then it's a sell signal. Second signal is, if you look at these two candles, that's the last engulfing top, right? And the shooting star close is confirming the bearish implication of the last engulfing top. So those are the two signals. One is a clear sell signal which is given normally by shooting star. And the second signal is the confirmation of the bearish implication of the last engulfing top. Number 3, would you go short on that evening star and why? See, if you look at this evening star, it's confirming the high of that shooting star, right? So yes, I would go short on that evening star. And if you look at this price action, it's not much of a support because it's not much of a downtrend as such. It's not a pivot low. So definitely I would go short on that evening star. And where would I keep my stop loss? It would be here at the high of the evening star. Number 4, why did the price continue to decline after this box range? See, the answer is simple, right? When the price comes down and the box range forms, the next price action is not going to be like this. It's going to be like this. The trend continues, which was before the box range. So here in this case, the price goes down. You have a box range and then again the price goes down. Number 5, spot the 3 black crow pattern on this chart. So the 3 black crow pattern comes after a uptrend. So let's look at an uptrend. You don't have 3 red candles here, not here. This is a downtrend, so forget about it. What about this 1, 2, 3? But since this is a spinning top, it cannot be classified as a 3 black crow pattern. So the answer is no. There is no 3 black crow pattern on this chart. Spot the 3 white soldier pattern on this chart. So white soldiers come after a downtrend. So let's look at downtrends. Here we have only 2 candles. Here we have 3, but the middle candle is a spinning top. So that's not the case either. Again, here in this downtrend, you don't see 3 simultaneous green candles. So the answer is no. There is no 3 white soldier pattern on this chart. Why would you not be surprised to see this box range here? The answer is obvious, right? If you look at this line, or maybe you draw a line here, that's a multi-tested resistance. If you continue this line, look what's happening. The old resistance is becoming new support, right? Change of polarity. That is why I wouldn't be surprised to see a box range developed here. Next, chart number 18. This is Litecoin weekly time frame. Would you trade this candle and why? So this red candle. Number 2, why is this shooting star insignificant in the context of this chart? So you're looking at this candle. Number 3, name 3 patterns that this candle is completing. So this green candle. Number 4, why would you wait for the price to pull back to the high of this candle to go short on the market? So this candle. Number 5, if this candle had no upper shadow, what would you call it? What price on the candle would become support then? So this long green candle. Number 6, the high of this candle is most likely to become what and why? So you have to fill in the blanks. This candle. Number 7, from the point of view of Fibonacci levels, why does this high wave candle assume significance? So, from the Fibonacci level point of view, why is that candle very important? So, question 1, would you trade this candle and why? So, this candle, although it is completing an evening star, but I would not trade that candle because it is not confirming any prior resistance, at least looking at this chart. Number 2, why is the shooting star insignificant in the context of this chart? Well, this is a trick question because a shooting star comes after a uptrend, not after a downtrend. Number 3, name 3 patterns that this candle is completing. So this candle, so first it is completing a bullish engulfing pattern. Second, it is completing a morning star. And third, it is completing a long white or green real body. Those are the 3 patterns. Number 4, why would you wait for the price to pull back to the high of this candle to go short on the market? See, if you look at this candle, it's almost a doji candle. And we know that doji after a tall white candle at a market top becomes resistance. So since that becomes resistance, we would wait for the price to pull back and then go short after that resistance is tested. Moreover, it is also the high of the evening star, which always becomes resistance. Number 5, if this candle had no upper shadow, what would you call it? So if this candle had no upper shadow, we would call it a shaven top, shaven bottom candle. So shaven head, shaven bottom candle. what price on the candle would become support then? If that were the case, then the low of this candle would become support. Number 6, the high of this candle is most likely to become resistance because this candle is opening near the high and closing near the low. Number 7, from the point of view of Fibonacci levels, why does this high wave candle assume significance? Well, if you look at the chart carefully, if you draw the Fibonacci levels from this high till this low, okay, so this is 0% level, this is 100% level on the Fibonacci, okay, so this around 40 and this around 140, right? So the 100 points difference. So between these, what is the midpoint? The 90 level, right? 40 plus 50 is 90. So that would be the 50% level. So if I draw a line like this, that's the 50%, sorry. This is the 50% level, correct? If we draw a Fibonacci from here to here, if this is 50%, then the 38% level should be somewhere here and somewhere here, correct? So in this case, this would be the 61% level and this would be 38% level. So in this case, the 38% level breaks where within 3 candles, it comes down. So you see some hesitation at the 38% level, or you can say that between the 38% and the 50% level, there is hesitation. The bears are not allowing the price to go up. So that's from the point of view of Fibonacci levels, that high wave candle reassures the fact that the bears are strong in this area and the market is likely to fall. And maybe the retracement has ended here. So chart number 19, this is Ripple, daily time frame. Question 1, which pattern does this candle complete? Why is this candle important on this chart? So this particular green candle. Number 2, if you draw a support line at the low of this candle, then would you be able to use that level to ascertain change of polarity on this chart? So if you draw a line here, support line, that's what I'm talking about here. Number 3, if you draw a resistance line at the high of this candle, would it be considered as a multi-tested resistance? So if I draw a line here, this line. Number 4, does this candle confirm a hammer's support? So this red candle. Number 5, this hammer shows up after an inverted hammer. Both patterns are bullish. Is that reason enough to get excited, and why? So here is the hammer, here is the inverted hammer. Number 6, what would have caused you to go long on this candle and why? So this green candle. Number 7, how many inverted hammers do you see on this chart? So question 1, which pattern does this candle complete? That's an inverted hammer. Why is this candle important on this chart? This candle is important on this chart because if you look at the prior candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. After 12 consecutive red candles, finally you have one green candle. That is why it is very important. So that's the power of Japanese candlesticks relative to bar charts. So not only do you have to look at the shadows or the height of the real bodies, you also have to look at the color of the real bodies. So after so many consecutive red candles, when you have a green candle, that really tells you something about the changes that are taking place in the market at that price point. Number 2, if you draw a support line at the low of this candle, then would you be able to use that level to a certain change of polarity. So if I draw a line like this, as you can see, that support has become resistance here. But the problem is this is not a multi-tested support. For a change of polarity, you need multi-tested support becoming multi-tested resistance. So in this case, I will not be able to use this level to ascertain the change of polarity. That is the answer. If you draw a resistance line at the high of this candle, would it be considered a multi-tested resistance? So if I draw a high, this candle tests that line, so 2 times that line has been touched. So that is a multi-tested resistance. Does this candle confirm a hammer's support? Yes, because the close of the candle is not below the low of the hammer. Number 5, this hammer shows up after an inverted hammer, right? There is an inverted hammer and there is a hammer here. Both patterns are bullish. Is that reason enough to get excited? That is not reason enough to get excited because, number 1, the bullish implication of the inverted hammer was not confirmed by a close of the next candle above the close of the inverted hammer. And number 2, this hammer doesn't seem to be confirming any prior support area. Number 6, what would have caused you to go long on this candle and why? Well, first, if this candle would have completed a morning star by a close above the midpoint of this candle, that would have been a plus. Second, if it would have confirmed some prior support area, that would have been a plus as well. And third, since both of these are completing a bullish engulfing pattern, ideally for a bullish engulfing pattern, I want to see a taller candle. The second candle should be a taller candle. So those were 2 or 3 things I would look for if that would have caused me to go long. And the most important thing is the confirmation of the prior support. That would have caused me to go long on this candle. Number 7, how many inverted hammers do you see on this chart? Remember, inverted hammer comes after a downtrend. So let's look at downtrends here. There is no inverted hammer here. This is not an inverted hammer. We want an inverted hammer after a downtrend. So if we go down from here, it's not an inverted hammer. So you start going down from here. This is the first inverted hammer. This is the second inverted hammer. This candle is not an inverted hammer because of that slightly larger lower shadow. So I would say there are 2 inverted hammers on this chart. So this is chart number 20, Cardano, weekly time frame. Question 1. Why would you not be surprised to see the high of this candle not becoming resistance? So this candle. Number 2. Why would you be super excited to see this candle? This one. Number 3. Does this candle complete a bearish engulfing pattern and why? So this one. Number 4. What do these spinning tops and long shadows indicate? So all of these candles. Number 5. Is an inverted hammer with no lower shadow better than an inverted hammer with a small lower shadow and why? So you're looking at this inverted hammer. Number 6. The high of this candle is also the high of a bearish engulfing pattern. Then why did it not become resistance? So this candle, this green candle. Number 7. Which pattern does this candle fail to complete and why? So this candle. So question 1, why would you not be surprised to see the high of this candle not becoming resistance? So if this candle has opened near the high, if this would have closed near the low, then I would have expected the high of this candle to become resistance because it satisfies the criteria for a long black or red real body. In this case, that is not the case. So I would not be surprised to see that the high of this candle has not become resistance. Number 2, why would you be super excited to see this candle? Now, to understand this, carefully look at the chart, okay? The price goes up here, a long red real body, and the price stops here, okay? That's a weekly chart. After 4 weeks, 1, 2, 3, 4, after 4 weeks, you have a hammer which confirms that low. Okay, so this hammer is confirming a low that was created a month ago. So we have to assign some importance to this low. Usually I wouldn't give it much importance because the price seems to be consolidating here. But since it's a weekly chart, we have to look at such levels, because if you look at this chart on a daily time frame, you will find something like a V here, right? So that's an important level. So if you see, this hammer is confirming that low. Now, if you were to go long on this hammer, so say for example you go long here, your stop loss would be here and your target would be here, which was achieved by the way. So that would be your reward to risk. Now, if you were to increase your reward to risk, what would you do? The best way to increase reward to risk is to put the Fibonacci levels on the hammer. So the high of the hammer would become your 100% level and the low would become your 0% level, correct? And you would put the order on the 50% level, this 50% level. So exactly at that 50% level, you get another hammer which is confirming that 50% level, 50% Fibonacci level. So that is why this candle should get you excited, because it touches the 50% level, so your buy limit order gets filled. Plus it stays, the close of the candle stays above the 50% level of the Fibonacci drawn on this hammer. Plus it doesn't touch the stop loss. So what else do you need? I mean, after looking at this candle, you should be super excited because the chances are very high that the price is likely to go up from here. If this was not a hammer, okay, then there would have been some cause for concern. But since it is completing a pattern, right, the price is going down and you have this hammer here, that is why I would be super excited to see that candle, because the Fibonacci levels are also important. Number 3, does this candle complete a bearish engulfing pattern and why? The answer is no, because a bearish engulfing pattern should come after a uptrend, not after a downtrend. What do these spinning tops and long shadows indicate? The spinning tops and long shadows indicate indecision. The spinning tops and long shadows indicate confusion in the market. Is an inverted hammer with no shadow better than an inverted hammer with a small lower shadow, and why? So you have this inverted hammer, it doesn't have any lower shadow, right? So you might give it more importance. But that's not the case. That should not how you don't look at it that way. Since it doesn't have any lower shadow, that means it is a better inverted hammer. That is not the correct way to look at it. You have to look at what happens on the next candle. So if you have, let's say, an inverted hammer like this, and you have an inverted hammer like this, so you're small, okay, both of these are inverted hammers. This hammer is confirmed by a close of the next candle above the close of the inverted hammer, but this candle is not confirmed. The price closes here, something like this, okay? So which one would you give importance? You will give importance to this candle, even though it has a lower shadow, okay? So it's not the shadow that matters here. Of course, the lower shadow should be small. What matters is the close of the next candle. Number 6, the high of this candle is also the high of the bearish engulfing pattern. Then why did it not become resistance? Well, it's not that it did not become resistance. The high of the bearish engulfing pattern, it does become resistance, okay? However, here the uptrend was so strong that resistance broke on the first candle that tried to test that resistance. And that happens in the market. The markets are random. Sometimes the volatility increases, sometimes some good news comes in the market and the price just gets pushed upwards. So it's not that it has not become resistance. It has become resistance, but it was broken very quickly. Number 7, which pattern does this candle fail to complete and why? This candle fails to complete a bullish engulfing pattern. Well, technically it has completed a bullish engulfing pattern, but ideally for a bullish engulfing pattern, you would want to see a tall second candle, not like a spinning top that you have here.